Hey, good morning, everybody. So today is Tuesday, right? Today is Tuesday, August 22, 2023, 7:21 a.m. Eastern Time. So as I post on Sunday, right? My market wrap on Sunday, I expected such a squeeze, right? So everybody in the group also was expecting such a squeeze. I also highlighted a possibility to see a 100 points squeeze, right? No doubt about the squeeze. I'm hoping the Sunday market wrap. I put out the order flows, you know, the premium, time that's printed, right? And at this in my summary, I also provide the GX and GX. I explain the pattern. I also explain the put call ratio was so high, is getting expensive again, calls getting cheaper. I show you guys the MLC on Friday, the fractal, the future fractal that I was looking for, the similarity of the candle left on Friday, right? So we expected this movement per book, per fractal, per volume profile. So everything was pointing for a squeeze. I also highlighted I also highlighted a Fibonacci projection, and I give you through Fibonacci, a graphic tools, two regions that will supposed to be a squeeze up to the 23.6% retracing or up to the 38.2% retracing, right? No, the 38.2 was uh, yeah, the bounce. I put everything over here in the graph. Let me put a little bit higher so you can have a better visibility, right? Special number two, option number two, 4,476. We could see a squeeze up to here. I don't disregard that, right? I don't disregard that. So we are expecting a squeeze, and now we are seeing the squeeze. I give you the summary, right? And I give you guys an explanation about the yields. But so far, the yields are not relaxing. So this is not bullish at all, right? This is not bullish at all. Let me see how is the yields. Yeah, the yields right now, yeah, is dropping the future, but not something significant because I was expecting at least a back test at 4.1, right? At least a back test at 4.1, but so far is holding at 4.3. Even yesterday, when we had 3 and 6 month action, and we not see yields going down. Also, the DXY, I was looking for a pullback up to 102.400, but DXY is really, 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 really strong. So even the swaps that we see central banks running during the intraday, the DXY is refusing to close below EMA 200, this red line. All the bottom have been absorbed. Looks that EMA 3 is already pointing south, so we could see a pullback up to 102.400 will be healthy for the dollar. And then a new spike high to backtest WMA 400 at 104.163, breaking, we will backtest 105. My target for the dollar is much higher, is something around 116, 120, okay? Especially because the yields. So to control yields, you guys don't need to go to Harvard. That, Federal Reserve, central banks will need to raise rates, right? Bring recession, consequently, strong dollar. So you guys don't need to go to Harvard to understand that, right? So other assets, let me mix everything. The another asset that I was expecting a bounce was BTC, but BTC is showing us how big is the China financial crisis, especially regarding liquidity. I explained this over here in Sunday market structure, right? About the Zonzi group. The Zonzi group in China, I also didn't know, was really big as BlackRock in US. Remember that those shadow banks, especially in China, have a buy power, really, a very strong buy power, especially because the amount of money they have over there and the amount of the population is really big population, right? Of course, over there everything's bigger too, like US. It's a big country, big population, a lot of money, a lot of assets to hold, like BlackRock, like Zonzi. We could consider also BlackRock as a shadow bank, as we saw back in 2008 as Lehman Brothers. Lehman Brothers was a shadow bank, right? They don't follow the same regulation as JP Morgan, Bank of America, and etc. In Brazil, like Bradesco, Itaú. In Europe, like HSBC, and etc. Citibank, and etc. So, you guys I put over here about China, but the issue is not only on China. The issue is global. Remember that the US is the last place to show that issue, right? The issue starts to show anywhere, and the last one is in US, right? What you guys now see in China with Zonzi, we saw over here back in 2008 with Lehman Brothers, right? So, and now, let me close this because I already spoke about, the movement that I expected in yields and DXY and consequently in the markets, fractal, Fibonacci, volume profile, and etc. Every cost of hedge, allocation of negative delta through put call ratios. A lot of people doesn't look like all the piece of the puzzle to see if you have a setup for a squeeze or not, right? Everybody has bias. I always like to tell people that to not have bias, follow the flow. No, I even in the open group I see, like, for example, people allocating money in commodity. I don't know what's the rationale, to buy commodities in such type of environment. Doesn't have any explanation to do that, right? We could just see spikes up and down, top and bottom descendants. Something that I posted to you guys yesterday was the EWC. So if you guys are bullish in commodity, you guys are supposed to be bullish in Brazil. Brazil is a poor commodity country. And look what dealers have been doing, right? So let me put the monthly graph so it'll be easy to watch. So you guys realize that EWZ is already in a downtrend channel. It's a very clear downtrend channel. Also lose, a very important support at 30.46. Of course, dealers need to bring this up again. Otherwise, the tendency is to backtest the lower band of bullish bands, the lower line of the bullish bands, around $25. losing $25,000, we will backtest, the bottom line of the channel. But look how insane are those candles, especially the red ones. There's a lot of volume in the red ones. So every MACD up you have been seeing in the commodity country, it's opportunity to sell. We call this a distribution, right? We call this just distribution. Distribution could take years. Could take years and years. Okay, anyway. So I also already talked about commodities. But let's come back to the squeeze, and especially to SP500, because usually we have a pattern. Let me draw over here, and you guys understand a little bit better, to form a candle like this when we start a descendant, flow, when a bearish flow. Usually we start to have, could you be, of course, green, or usually it's green, that's a squeeze pattern, and you see, let me move this candle to over here, and you guys understand. So, and then you see the 3 EMAs passing inside the candle in the follow order: 20 at the top. Let me put in blue. I use blue. So 20 at the top, and then in green I use EMA 8 in the middle, and I use red for EMA 3, and then EMA 3 at the bottom. So as soon as you see EMA 20 blue, EMA 8 green, and EMA 3 red pass inside the candle in the follow order, and indicators such as ADX, such as MACD, and such as TRIX, giving us a bearish sign, we call this a bearish, we call this setup bearish needle, sell sign. So per graphic pattern, when we start a meltdown, in the middle of the way, we always see a squeeze to see this bearish needle formation. Of course, the bearish needle formation starts in the daily graph, and then we will see this in the weekly graph, and the worst for bulls is when you see this pattern in a monthly graph. Okay, but to reach the monthly graph, we need to first daily, weekly, and then monthly. And of course, the worst is in the year graph. So in the middle of the way, in the downtrend flow, in a bearish flow, in the downtrend pattern, we always see a squeeze to see all the EMAs passing by inside the candle. And consequently, on Friday, I highlighted the future, especially this fractal, right? Especially this fractal. So I highlighted this candle that mirrored this candle on Friday, and then I expected a meltdown. Exactly what I'm saying right now. Where it is? And look, when we squeeze, look the pattern here. EMA20, blue line, pass at the top, EMA8 in the middle, and EMA3 at the bottom, pass inside a candle, right? And we have a confirmation with MACD, where, MACD start, to show a sell sign. If you come right now, we have the same pattern, right? And it's more worse because, the enlace, it's already trying to, the enlace start, of course, before, but, the EMAs is going below the candles, much worse than when we're at the top. It's much more because over here, we saw the EMAs at least above the candles, the MACD candles, right? So it's kind of a little bit more worse than here, right? I don't know if you crash. I cannot call a crash. I can tell you guys that the liquidity have been draining, especially in China, but in US, we still have liquidity, right? But that's the pattern that I'm looking for. I hope you guys understand. And I also show here, that was good because we saw this when we all-time high. So this fractal looks like exactly what we're looking for right now. So over here, you guys can realize that we make a fake break of EMA20. And then afterwards, we saw a drop. If you check the dates, this was Friday, this was Monday, this was Thursday, and this was Wednesday. This was January 13, 2022. Let's check it out. January 12th. Yeah. So this was Wednesday and this was Thursday. This was 13. So this here was 10 on Monday. This candle was Friday now, right? So this was Monday, Tuesday, Wednesday, and Thursday, right? Right now, of course, the days are different, but you guys observe that the pattern, the fractal, is almost the same, right? Maybe instead of 2 days, maybe you have one more day up. Anyway, but I hope you guys understand in a graphic pattern what I'm looking for, right? I'm looking for those 3 EMAs pass inside the candle. And I'm looking for a rejection or in the EMA20 or in the middle line of the bullion band. So if we will backtest the middle line of the bullion band, the squeeze will go higher, it will be almost very close from 4,500 at 4,409. And consequently, we will see the adjustment in the bullion band as well, because it's already really wide in the daily graph. Okay, so now you guys understand about the pattern that I'm looking for. So at least today, I told you guys a region between 4,420 and 4,427. 4,420, 4,427 basically is this enlace over here. It's those 2 EMAs. Is that region here. If you notice, we have the EMA 50 and the EMA 8 here. Okay, so that's, also for the option books, the orders that printed yesterday, they want to take the market at least up to the region. If you break the region, I don't disregard to back test EMA 50 at 4,457. Okay, and then we have this formation. But put options for the flow that I posted to you guys in the market wrap yesterday, so far dealers is looking to a back test at EMA 50 and EMA 8. So far is here. The squeeze is supposed to be finished here. I don't know. We need to see the flow. So if we break the region, we will back test EMA 20. And then we have the formation that we're looking for. Okay? I finished by here. Oh, let me show one more thing. That's the spreads. Okay? You guys already realize that Bitcoin is totally dead. I know that a lot of people compare with other cycles, but the majority of the people doesn't understand the economic situation that we have right now. The cryptocurrency never pass for a financial crisis. Never. Bitcoin born, cryptocurrency born in a financial crisis. Okay? It's like a bubble. The person that creates the Bitcoin, we can compare with somebody, with the same person that, wrote a Bible. I believe in God, but, I'm not, how can I say, addicted and defend, the bubble in all the ways that they tell us to how we need to do. I'm not addicted to do that. But you guys already realize they create like a religion for crypto investors, right? When you talk to a crypto investor, they came to you with the same answers all the time. Every crypto investor, oh, this is hair, this blah 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 blah. You know everything, right? And but you guys already now realize that everything is totally different. That's the point, that people still not looking for. I don't know if Bitcoin go to $1 million. I don't know either if the Bitcoin go to zero. The only thing that I try to explain to you guys, the health movement is to see Bitcoin back test, the pivot that starts such movement at 3,600. That's totally health. This is not talk bad thing about the asset. I'm just providing you guys what Tulipa did. And to talk about Tulipa is not a bad thing either, because it was a bubble. And if you guys look for Roku, for example, Roku make a Tulipa movement because it was a bubble. And people just realized that Roku doesn't, value what we saw back in 2022. Just, look Roku graph. Go back to backtest the pivot. That's totally normal. This is not to talk bad things about the asset. That's, a health movement. Anyway, let's talk about, a little bit about the spreads. Let me show you guys. Let me put the profile first. Let me put in the monthly graph. So as you guys see back in 2020, the spread between commercial, when you see commercial, bonds means private companies like BlackRock, JP Morgan, Apple, Microsoft, whatever. And government bonds mean federal bonds, So Treasury, U.S. Treasury Department, right? Government, bonds. When you saw a spread reach those levels. You guys realize that the COVID, if you guys know how to read this, look how the spread was back in 2018. You saw a crash back in 2018, right? You saw a crash back in 2020. When they spreads, the bonds, spreads open like this, it's because the economy is running without liquidity. Dealers create something to ask for money from the government, from central banks. Basically, guys, I don't believe in COVID. I swear I don't believe in COVID. I don't believe, in a lot of, triggers that the market, implemented to see a meltdown and consequently to see a money injecting in the economy. Because I look for the spreads. When the spreads is like insane like this, it's because the money is over. This is our fall, retail fall. When I call retail, it's not only us, but corporations are retail because they depend also from the government. You guys understand the capitalism is looking for money all the time. Even the capitalism is looking for the money. If you guys look for the economy, and everything that I'm looking for, this bullshit about socialism and capitalism doesn't exist. It's the same. Both are looking for a support from the government. Why? Because they finance the government. When they mess it up, they go and knock the door. Government, I need money. Because that, I don't fucking care about Trump. I don't fucking care about Biden. For me, it's the same bullshit. Managed by big banks. Nowadays, JP Morgan. Trump was managed by BlackRock. Now it's JP Morgan. So I don't care about them. I will start to care about them when I see somebody that will not be manipulated by the system. When this happens, I will be passed away. I will not see that. I'm sure that I will not see that. Hope you guys understand why I don't like to talk about politics. Because it's poor bullshit. When money is over, they knock the door, the government, print money. That's how things works. Capitalism, socialism is the same. It's the fucking same shit. All of them is still money from us, taxpayers. Okay? So, coming back to what is important. Nowadays, they spread, I don't know how to I draw here. Here. So if you see the spreads over here, it's not too wide. So we still have liquidity. We still have liquidity. When you start to see a spike here, show anywhere, let me put in blue. And then, because, usually, how can I say, the commercial bonds is really flat. You guys can see it's really flat. Why is it really flat? Usually they pay more. It's like shadow banks. They need to pay more as the government. They need to pay more rates to attract us to invest our money. So you never see, a spike in the commercial bonds, but you always see spike in the government bonds. So when you see a spike again in the government bonds, and the spread is getting huge, like here, right? Here you see that no interest between 2019 2020 became, the spreads also became negative, right? Nobody looking to buy, government bonds. Nobody was looking for safe haven. Then we crash, right? Then we crash. That's good, that's easy way to analyze when we will need to buy risk and when we need to be out of that. When we start to play much more fixed income instead of, risk assets. So back here in US, we still have liquidity. Hope you guys understand this. Because the spread is not wide. Look what's happening after the COVID. See? Totally risk. Was in risk on. Buy equities. Basically, we didn't have any spread. Wasn't attracted to go to fixed income. A lot of money back to the economy, spiking risk assets. Right? No spreads, basically. Then spreads start to jump. 2022. Look, 2022. Let me highlight to you guys. 2022. See? The spreads jumping again. What's happening in 2022? A sell-off. Market came from 4,800 up to 3,400. Now in 2023, this is end of 2022, right? This is end of 2022. So market bottom, right? Observe, this is October. Since October, the spreads start to went down. What's happening with the markets? Markets went up from 3,400 up to 4,600. Now, the spreads is trying to be like this. But Fabio, do you believe the spreads will be like this? No, I don't. I expect in some points the spreads will be wide open like 2022. And then I expected, again another sell-off. Could you be starting tomorrow? I don't know. But this is something that I'm looking for. Because when I see spreads like this, it's because people is moving to safe haven. It's because, liquidity is being drained. Economy will enter in a recession. So you guys don't need to go to Harvard to understand that. You guys don't need to be an economist to understand that. So, spreads is going down, markets going up. You guys realize you have two peaks over here in 2023, markets melt down. Now it's totally normal will you see a rebound. Or will you see the pattern that I told you guys, or the spreads getting really tight and we could see an all-time high. We cannot close our eyes for the possibility of all-time high too. Okay? So we need to look for the spreads. Put, in your trend view. Spreads start to open, risk off. Spreads start to be really tight, risk on. Liquidity. Dealers know what to do. Okay? Dealers know what to do. So, and this is another thing that I was looking for that, make me conclude that we're supposed to be see a spike. Oh, September, October, November, December, you see a crash? I can call a crash. I can't. Nobody can't because we are not dealing. I have been explaining you guys some, Twitter accounts like Jean Croissant. This guy is a fucking bullshit. It's a clown. Every time that he opens his mouth, for me, it's a clown show. Because this guy doesn't understand nothing. Nothing. I never saw him explain to you guys a spread between bonds. These guys only, now he's a weakness, a window of weakness. Based in a VIX expiration dates. Fuck, this is too basic. How a person could manage somebody else's money? If maybe I really hope he understands that. But the way that he came to public through CNBC or through TD Ameritrade TV, he show us for persons that understand the market, especially the market structure, that he doesn't know nothing because he opened his mouth to say bullshits. Basically a clown. Basically a clown. Of course, the TV shows is pure propaganda. Nobody will talk about this. Because, the TV shows doesn't want to, everybody understand like this. Because if everybody starts to understand, it will be much more easy to allocate money. It's much more easy to discuss asset allocation. It's much more easy to discuss where the premium is. Everybody's supposed to be understand where the premium is. And we start to see the crypto folks bullshit talk as well. Right? But nobody will explain this to the general public. Because the dealers doesn't want to teach people. No? Dealers really want you people learn Fibonacci, graphic pattern. Because dealers look for general public money. That's the way that they collect money. They like to bring anxiety and bias to general public. And this is the way that they make money. Right? So, summarize, what I said. I'm expecting a melt up doing the volume profile post last Sunday because the cost of hedge is getting higher and the cost of to be long is getting cheaper, right? The other point is the fractal that I was looking for, and especially is the pattern that we are seeing in bond spread, possibility of a pullback in yields and a pullback in DXY in dollar. Consequently, we enter in a small risk-on phase. And again, bonds spreads in US still show us a liquidity. It's going down. Now spread is going down, it's going tight. Risk-on market is going up. You guys got it? So this is the summary of, the market wrap that I wrote to you guys. Now showing patterns, especially patterns, why the meltdown. If somebody, was looking for meltdown, not meltdown, sorry, a bounce, and don't know how to explain why the market's bounce, this person doesn't understand the market. This person is a charlatan. Right? So if you follow somebody, you pay for somebody give you advice, these persons need to know all the financial structures that, move markets up or down. If those persons don't show you guys why, they only show like graph patterns, please don't pay them. Because they don't know shit about markets. Be careful, because this is an industry that we have a bunch of people, bunch of furus that sell service and they never trade with their money. They trade with somebody else's money. I think I'm the only person that charges $20 and I don't care about how many people, be in my group. I want to, stay really very tight group. Lack of persons. Not too much, because too much people kill the plant. Too much water kill the plant. Too much people mess it up as well. Right? How can we hear 1,000 persons? 1,000 different comments. 1,000 different ideologies. 1,000 different, perspectives. you mess it up also with our analysis. And because that, I really like a very small group, because I'm not here to looking for money. And of course, I expect respect from everybody to pay me at least at the day, right? So it's $20, like a 12 packs beer. That's my price, you know. But guys, I finished by here. I hope you guys understand. And this is my morning call for today, Tuesday, August 22, 2023. It's almost 1 hour, not 1 hour, like 30 minutes morning call, since it's 8:02 a.m. Eastern time. See you guys later.